Hey, good morning, traders. This is Trader Tim, eMoneyMind.com. Today is Friday, August 5th, 2016. Well, we finally got our 2175 touch intraday, and that occurred today. As we were talking about all week and last week leading up into August, August is a very weird, strange, choppy, dirty month. It's just, for whatever reason, August is a very challenging month to be a trader. So, I've got a couple things to touch on from trades this week, and a couple things you can do to prepare yourself for the fall. If you take a look at the current E-mini S&P chart, we've got that 2149 and the 2169 highlighted, and you can see how we dipped below that with a tail intraday, but then we closed back within that range. And today it's about 9 o'clock Mountain Time, so 10 o'clock Central. So the markets haven't closed yet, but this could be the first close really outside of this range that we've had in about 3 weeks. So that would be pretty big, coming up finally the bulls, for whatever reason, being able to push the market above this rectangle after some selling pressure occurred. It's just been a really strange sideways consolidation window here. Now, now that we've hit the 2175s, we could still continue higher, but being that we're at the negative 23% target from down below, we could also start to roll over. The nice thing about this rectangle is we've created a support level, so if we do move higher from here, then a pullback to the top of this range, the 69s, would be a potential buying opportunity. And if we were to break down, a potential bounce up to 2149s could be a potential shorting opportunity. So we'll have some good lines in the sand. All in all, the markets intraday have been a little bit lackluster, a little bit non-traditional, if you want to call it. I mean, if we just take a look at the Wednesday's chart, I mean, you've got bullish bar, bearish bar, indifferent, bullish bar, bearish bar, bullish bar, bearish bar, just constant back and forth fighting between bulls and bears. Typically, there's not as much volume in August. A lot of traders are on holiday, the kids are going back to school, so there's a lot going on. But one thing I wanted to talk about that I've had a couple emails, good questions on, is bracketing the first 5-minute bar. So this is something I'll do a lot, and you've probably seen me talk about it and utilize it on the Tuesday live trading sessions. But the best context for getting long above the first 5-minute bar or short below the first 5-minute bar is when we're in a gap scenario. So that's exactly what we had today, Friday. We gapped up, and I'm okay with going long or short on a gap. And typically you'd like to see the gap be 5 points, or at least big enough where the distance from the gap to the previous day's close is 4 or 5 points. So today yesterday's close was about a 59, and then today we opened up around 68s. So we had a nice big gap, and what I simply do is put a buy stop above the high of the first 5-minute bar, and you can put a sell stop below the low. And that way, if we gap and go, as was the case today where we gapped up and we continued in that direction, the buy stop gets you in the trade with the momentum continuing. And then you can just trail your stop underneath each candle's low as we move higher until there's some sort of pause or reversal, and then you get taken out of the trade for a pretty decent profit. If we gap up and start to fall back, or gap up and fade, or gap and crap, as it's sometimes called, a sell stop below lows would get you into that trade. And then you can do the same thing. Instead of trailing lows, you'd be trailing highs of each candle on the way down, in the assumption that will come down and fill that gap. So you can set both orders out at the same time, and then if whichever direction we end up going is the trade that's going to fill you. So this works really good with gap scenarios. When we get into scenarios where we are basically opening at the previous day's close, I don't like to use it because we can end up just opening and going very quickly in one direction for a very short-lived period and then reversing. So if we open up right at the previous day's close, or without a very major gap, then instead of just bracketing the first 5-minute bar, you can let the initial reaction occur. In this case, we just had a very slight move higher by barely a point from the open up until the next 2 bars, and then you can look to fade that move. So on Thursday's trade, letting the first 5 minutes occur, there wasn't really a gap, major gap, so not bracketing the first 5-minute bar, but letting the first couple minutes kind of digest, let the market take a breather, and then once we started to roll over from highs, that's when you could use the low of the high bar or high of the low bar, depending if we open up and move lower. In this case, we opened up, moved a touch higher, and then short the low of the high bar and take that down into lows. And then here we have another scenario where we have that double bottom. And so when typically if we're just an inside bar, I like to leave my stop above the high, in this case because we're short. But when we get this double bottom like this, where 2 candles touch the same low, then I will move my stop above the candle that has the lowest high because of the short here, because the double bottom can essentially mean a bigger reversal could be coming. So a couple little nuggets from Thursday, and then Friday, a good example of the gap and go, just getting long above the first 5-minute bar and then just riding it out until the 705 bar here that ended up starting to get a little bit of a rollover, and now we're resuming the trend. Nonetheless, nice little move this morning. So going into next week, if we can stay out of this 2150 to 2170 range, that would be a good scenario. The VIX is still very low, so the ranges are pretty tight. There's not a ton of volatility. That being paired with the month of August, be extremely cautious if you want to take this time to kind of take a breather, review your year so far, go through your trading plan, things like that. Just trade on sim so that you're still involved looking at the markets but not necessarily getting chopped up. That's totally okay. If you want to join the live session on Tuesday, feel free, emoneymind.com/VIP. And if you have questions this weekend, give me a shout, tim@emoneymind.com, and I'll talk to you there. Thanks. Have a great weekend.